zooming in on this, or is he coming live?
Look, he's at the Columbus Board of Realtors for his email. He's there ahead of us.
Oh,
But
okay.
he did say we're having it here, so thinking it's Zoom. Guess we'll find out.
I'm interested in learning about this.
Yeah.
Oh, me too. I keep getting beat out by all these cash buyers. We're like, where are they getting all this money?
Yeah. So my question is, are you getting beat out by cash offers or are you getting beat out by better pricing?
Right,
Right? And you don't always know the answer to that.
right.
Hello.
There she is. Hi, Chelsea.
Usually find out after the close, but,
Yeah, because lower.com is doing this too. They're calling them cash backed offers.
right.
And still don't have the tax go over and cover an appraisal guy.
Oh, well, you do, because they didn't explain it very well to you.
Ah,
Did you hear me?
No,
I said, you do, they just didn't explain it.
okay.
We got you covered.
These programs.
Oh,
We just talked with the guy from Ribbon was on our call, our OP call. so.
oh, yeah?
Yeah.
Yeah, I just tried to send one. I know, well, we wanted to give other agents around. And that didn't work, and she's like, for confidential, confidential reasons, I cannot why the buyer is not approved, but, we can put a buyer. Like, okay, well, I'm gonna text her and ask her to call you, and she will tell me whatever. We just call it, so I can figure out what else I can do, but,
Right.
He's still over. I'm hoping he's sleeping. They have a lot of questions.
Yeah.
A lot of redundant questions.
No,
listen,
a lot of redundant questions again.
yes,
Yes.
I recovered that.
There's
10 minutes
a
ago.
all over
We'll
again.
do it again.
So my question is more philosophical, I guess, is, if I've got a seller, my experience is, if I've got a seller with an offer that's $10,000 to $15,000 higher, but it's financed and it's a solid pre-approval, and they gotta wait an extra 10 days to get it, they're going to wait, and the cash offer's not gonna win that, but,
right.
you know.
But the cash offer is to be a backup to it.
Yeah.
So,
I don't care for own products or not, even like, I have said everything here nowadays, as long as they really show me the money.
Right.
the other thing is, Kathy Cairo said this in one of her things she did, is I see more and more where the listing agent says no escalation clause.
Oh,
And she says, Kathy says, you're working for the buyer, just ignore that. They're obligated to present that. Do it anyway.
Yeah, you are. I mean, you presented an offer, you're obligated to present it, but I put that in there for my sellers because
Yeah.
there's no benefit to the buyer or to the sellers with escalation clause. I said,
yeah,
it's all about the buyer saving
Yeah.
that money. Look, if you're willing to go to 280, go to 280.
yeah,
You
and
know,
it just for more confusion for the seller, so why they want that?
I had one 4 years ago. It was like one of the first ones I had seen. And we were 259.9 in Spring Grove in Westerville. Crazy number of showings early on. I had maybe the first showing fired an offer at 260 with an escalation clause up to 285. It's the only offer we got. Well, and it was one of the hardest deals to get to a closing table I've had in a long time because the seller was pissed. They were willing to pay 25 grand more than that. Asked for the world on the remedy request, and she wasn't fixing crap. And the buyers thinking they overpaid. I mean, it was just bad. We got it to the closing table, but man, I learned a lesson there. That's another reason I don't like to see
I
this.
don't have to do that.
But she's right. I mean, you know what, for that matter, even if there's deadlines and you miss the deadline, if you submit it an hour after the deadline, they still have to.
Yeah, that's just-
No, they might already be in contract, but they have to present it.
Right.
So, Bill?
Are you sure we have to present it? I
Yeah.
have people that do not present my offer. Just because I passed half an hour.
You know what, they have to.
Yeah, but like he
They
said,
say-
But it might already be in contract.
exactly, they
Yeah,
probably
but
accept it.
they say you passed the deadline.
If we're losing out to curb offers, we don't even get a chance to see the damn thing.
I tell my
They
people to make up offer if they feel confident.
Yeah, because they're doing so many coming soons, about a week ahead of time. And that's what I'm telling my buyers is, hey, if this is what you're looking for, the pictures look good, you drive by the neighborhood.
Because a lot of property they have on the list of improvement, if SBAC brand new, roof is brand new, nothing wrong with foundation, why the hell my client should care? Because they only care for big items, and if it's like $500 for plumbing, fine, we fix it. You see everything slow down, right?
Yeah, I had a great listing over, side of the woods, Western Run. We got 3 shows. 300,000. Thank goodness.
And that's the funny thing is that realtors are assuming
Yeah,
that they're there.
they should ask.
They should ask them, what do you tell them? You know, we got an offer, well, I'm an investor. Yeah, it's a crappy offer. Well, like you said, what do you get? Okay, the offer's at list price, but we're willing to go 30,000 more on an escalation clause. It's like, okay, I'm counting back. to this
Yeah, I
number,
agree.
and it's like, you must have another offer for this. No,
Everybody has cookies.
Yeah, so what do we do with the agent was?
It was fun because this one, they were adamant, they didn't want to tell. When they saw the number. They were hesitant to ask me if it was for an owner occupied. Like, the truth is green.
Yeah. It's true.
Wow,
I realize
I've never heard
I'm
truer
not-
words. The truth is green.
Yeah.
But I have 7 offers on my little listing on, Southwestern School.
Yeah.
They only pay
The offer's
like
coming in from?
10,000 more. So back in the day, it's 40,000.
It's slowing down.
Yeah.
I'm feeling it.
It'll be non-contained.
So are we gonna have, oh, there's one also there to ask for closing costs, and I'm like, ooh, that is
Dare.
cute. Yay, fires underneath. So, well, that offer didn't. He's like, no, I know, we're not there yet.
Yeah, until I get-
I'm not writing it. Right, but at least you see it. Yeah.
And that's kind of mine.
He didn't think he was gonna do 2 hours.
No, that's why I called. I said,
Well, his going to be 2 hours, but they all had lots of questions. So the way that he's like getting out. So
Well, he should eat by all of us dinner, that's all.
Smart.
It goes stays all the negotiations, right? But listen,
I like it. That's what I would have done too. Sounds like Jeff Ruby's to me.
Oh, now that's a big.
I mean, you went a little far, like, partner negotiations, you could ask for a belly, so you get a bigger.
Ask for the
bill.
We can do, Texas Roadhouse, that's fine.
Yeah, I'll just change course there.
You ask for a belly, you get a ringer.
She said,
I mean,
she said she's pregnant right now, and.
but I noticed,
we're gonna do
like,
that. She's pregnant.
Stella pay closing costs for a couple of grand back in the day. Oh, so. You think we're gonna get that this year?
Yeah, I'll let you know. I'll let you know.
I think what we're seeing is
Just that's truly what happened.
So people just have a.
You know, it was on road, it's a Euro.
Well,
It's all about
there's still more.
I will.
Yeah, but it was
All right.
here and now it's what, it's here, so it's not here.
No, no.
So that's what he tried to say.
Yeah.
We finished last month.
But it's just a handful. Like, I don't believe that.
Well, would you look at that?
Just hard to compete with
First
first time home
time
buyers.
Especially the first time home buyers. I mean, there's large groups get knocked out of the market.
Yeah.
Hello.
Or people move up to no, because they move up to
Yes.
0.8%, they can have the next home, but at 5%, it's no longer next home.
Right.
Yeah.
So Beck, the article I just wrote doesn't come out until July. And then the article I said, we're not in recession now, we're going to be. So, and then the market was up today. Whatever.
Exclusive club.
Well, I'm still playing with it. Still playing with it.
You just don't place to place with your entourage.
Pretty much, yeah.
I got the cheap seat, so I think.
Yeah, what are you guys doing here? I'm gonna say yell. You guys are all in the back row.
It's like church.
No.
This one does.
Yeah, thanks for my voice carries pretty much. Yeah.
Inflation, interest rate, they all work together though.
This isn't on
Well,
yet.
clearly that's a recession. That's happening.
Okay.
Yeah. Just don't know how bad it's going back. We'll just know how it goes.
Okay.
So if there's anything you need, let me know.
We just,
There's what?
you know,
If there's anything you need, let me
we just don't really clearly understand the intel. Yeah. I mean, they're picking turns up with their- right?
Do you want your computer back?
Yeah, there's so many backup stuff, it's really hard to predict right now.
2050.
Taylor, do you need to use the whiteboard?
Yeah.
Can you get, you just want me to exit on or not, like,
Well, no, because there are people watching from home.
ha ha
Can
ha?
you use to the side of it?
Yeah.
Yeah, we can erase other things if you need.
I don't know, no, he can chicken scratch.
We'll need to actually, I'll have the camera face him versus us.
He might not need to, but just. For all of you visual. That's enough.
Oh, it is facing here, because I can see myself.
It's a-
That'll help too.
He won't need it.
Right, and the
He carries well.
He's on that, so.
Yeah, I'm aware. Is that the one? Right. Oh, I didn't know that. No, that was NIMBY. Like, really alcoholic. How does that vote?
If any of you need pens, I.
So how does that jive with? completion on Saturday?
I have no idea.
So that's what's confusing about this market.
The seller, rather than the tip, because they didn't give me an offer. You're gonna write one. It was just, you had your open house, like your open house ended at 4, and I'm calling you at like 4:30. I gave you a half an hour to like compile yourself before I said, hey, I'm gonna put in an offer, and she was like, I'm pulling up in the market, I just left their house. They didn't get any other offers and they're not. And so she's like, I'm like, you're canceling? She's like, yeah, I'll be canceled within the hour, so, you know. I see it pop up this morning, it's actually canceled, and so I called them, it's like, hey, we're interested in putting an offer, and she's like, oh, we'd love to see an offer. Okay, well. I don't know, we just have a tip with the agent or what, but
We're in a shift, we're just not in a traditional shift, we're just very segment.
Yeah.
what do you mean to say?
That's the way I don't know. And tired.
Like me,
Good houses is overpriced.
Yeah.
The good ones are still negotiable.
So,
The ones that are just so, it's kind of like. The problem is they create the wrong expectation, they're not pulling it back from them, saying that. I know what your neighbors did, this is what's happening right now.
Chelsea, do you have Mark's makeup?
I mean, I can.
I'm not quite that fancy yet, but is my forehead too shiny, so yeah. Get some powder on. All right, are we on Zoom also?
Yes,
we
so
are.
if you wanna write on the opposite sides of the screen, please.
Makes sense,
I mean,
got it.
you can write around the name if you want to, I just don't.
Might be
know
hard
how
to
make
see.
that go away.
Okay. We'll see what all we get into here. So I just stopped this class for 2 hours at Columbus Realtors down at
So
the
you should
airport
really
parkway.
do that now.
Yeah, so I know everything that I wanted to talk about, plus the, I don't know, close to 2,000 questions that were asked after. So I got everything down at this point in time, so. All right, so what we're gonna talk about today is our Rapid Cash Advantage program, which is backed by a company called Ribbon. I've got an office down in Charlotte, North Carolina. Ribbon came out there about 2 years ago. We've been participating in this program for about a year and a half, but it just came to Columbus, Ohio about 2 weeks ago. So it's brand new in the Columbus market. So we're just kind of going around educating people on the program, when it works, when it doesn't work. So if you've got buyers that are challenged in the market, we're hoping that this will fill a void and become a new tool in your toolbox. My team knows this product really, really, really well. I can say now I have a Ribbon rep in the last class, but I was actually on their webinar earlier today, pointing out their mistakes, and they didn't know their program well enough. So I'd like to think I have an expert at this program now because I was right on the 2 things that I corrected them on, and I got their website fixed today. So I feel pretty good about that. So this is a program that I know really, really well. Everybody in my office that touches a loan file knows this program really, really well. We're going to get into some math, right? So we're going to kind of talk a lot of numbers as we go through this. I'm going to hit some highlights first, get into math, and then come back to answer some of the big questions. The good news is, if you don't want to understand the math, you don't have to. We're going to do this through our pre-approval process, and we will have this conversation with the buyers as they submit offers under this program. So I'm educating you just so you feel confident, comfortable with the program itself. We do not expect you to break down all of these numbers and go through all of the math with your clients. You obviously can, right? There's calculators and different things that you can do, but this is all designed to be educational, informative for you. But again, as you have a buyer that qualifies for this product, that wants to use this product, we're going to talk about it at the pre-approval console. When they go to put in an offer, we're going to walk through all these different numbers with them. The main driver of this program is in the market, right? It's not a buyer's market yet, right? People keep talking about the shift, but it's not happened in Columbus, Ohio yet for sure, right? So when a desirable property comes on the market, there's 10, 15, 20, I mean, in the height of it, 40, 50 offers on the property. Buyers get beat out by cash offers. They get beat out by hedge fund companies, iBuyers, right? There's lots of reasons why your buyer gets frustrated, overlooked in the market as you submitting offer after offer after offer. The design of this program is to elevate those buyers from being a finance contingent buyer to being a full cash offer, right? So I'm going to walk you guys through what that looks like, but that's the main concept behind this, is to give your buyer's offer more credibility by backing it with cash, so that if they can't close for any reason, we're going to still close the loan with the backing of Ribbon, not close the loan, but buy the house, right? And rent it back to the buyer. And I'll walk you through how that looks. So from a listing agent perspective, if they accept a Ribbon offer through the Rapid Cash Advantage program, it is fully guaranteed to close with just a home inspection contingency, which I'll get into that, okay? So the idea behind this is you can waive financing contingencies, you can waive home sale contingencies, and appraised value contingencies. And we're going to walk through what that looks like. But that's kind of the big key to this program, is if you've got a buyer that's struggling to compete by going 30K over ask and needing to cover a $40,000 appraisal gap, right? If they don't have the funds in order to be able to do that, or they're getting beaten out by hedge companies or cash, that's where this is going to come into play. It is not a magic pill. We've been doing this program for, again, a year and a half down in the Charlotte, North Carolina market. About 25% of our deals down there close with this program. So it's not all, but it's a sizable amount of our volume that goes in with these cash-backed offers. So I'm going to kind of walk you guys through what that looks like, okay? So there's going to be really 3 high-level reasons that you're going to use this program up front, right? The main one is to make the buyer's offer stronger, right? In most offers, right, there's a lot of concern on, is the appraisal going to come in? And if it doesn't, does the buyer have enough cash to back that appraisal, pay the full appraisal gap to get there, right? That fear is heightened if it's an FHA deal or a VA deal. This is going to level the playing field for any type of buyer. Anybody that we have pre-approved is eligible for this product. Somebody pointed out there's a flyer. My North Carolina branch is a little more conservative than myself. They put a 680 minimum credit score, like a max 42 debt ratio. I don't care about any of that. If we can pre-approve them for financing, I don't care if they're a 580 credit score with a 57 debt ratio, they're eligible for this product. We've done enough of these with Ribbon where they trust fully our pre-approval. So if we say they're pre-approved, Ribbon doesn't look at any financial documents from the consumer. So because we have a good track record, once we say they're approved, Ribbon's got them approved. So there's no extra qualifying. They don't do their own underwrite. They never look at a buyer financial doc anywhere through the transaction. They take our pre-approval as the gospel that they're going to be able to fulfill and close on the home. The whole premise behind this is financing will work normal, right? So the whole goal of this is just strengthening the offer so that it's a fully cashback offer. But once the offer is accepted, outside of the fees that we'll get through, everything else with financing happens normal. If they're FHA or they're conventional or they're VA, the financing is going to go through. We're going to close in 21 days, just like we always have. Really doesn't change. The buyer's just paying a fee to submit their offer and get it to stand up front. Okay. Again, in the scenario where they're fully pre-approved, the seller accepts this offer, everything's going smooth, and then all of a sudden 2 days before closing, the buyer loses their job, right? They get caught in a mass layoff. We just had this happen like a week and a half ago. So we obviously can't close a loan for somebody that is currently unemployed, right? So what would happen in this case with this program is Ribbon would step in and buy that property in cash, rent it back to the buyer for up to 6 months, allowing them to fix whatever the issue was that prevented them from closing with financing, and then buy the house back for the exact same price. So in that catastrophic instance where they get laid off from a job, or they decided to go buy a yacht the day before closing, right, whatever it may be, if they cannot close, Ribbon will close, rent it back to them, and give them 6 months to figure it out, right? So that's kind of one of the big keys of this. The other piece that we can do with this is we can remove a home sale contingency. So if we have a deal where we know the buyer is not going to be able to sell their home before they buy, but they need to, right? So typically their offer would be contingent upon a home sale. We can remove that. Well, the way that that would work in this case is that Ribbon would step in and buy the home on the day that we set the contract to. And then again, the buyer moves in, rents the property. It gives them 6 months to clean up their house, get it on the market, get it sold. Once it's sold, they now qualify for financing. We do the financing, and then they buy the house back from Ribbon. So they have up to 6 months where they can do that. So if you've got the client that just something goes wrong in the middle of the deal, they were supposed to sell their home, but now they can't, this would come into play. Or if you've got somebody that's a hoarder and is going to need 90 days after they move out in order to get the home to go on market, this works for that scenario, right? They can literally move into their brand new dream home. They've got up to 6 months to get the old property cleaned up, whatever it may be, get it on market, get it sold, and then still be able to buy the property. Okay. So there's a couple different, nuances to this. The hardest part for people to wrap their brains around with this, again, is the math. So I'm going to kind of walk through how that looks in a couple of different scenarios. And I'm assuming based on what I got from the last class, there's going to be lots of questions on it, right? So I'm going to go through like a couple scenarios first, and just bear with me for like 5 minutes, and then we'll start kind of going through the questions and different things on how this stuff works, okay? What I'm going to have you guys do, just because it became such a focal point, I'm going to have you guys jump to 3 forms that have green on it. They look like Excel spreadsheets. The first one should show like 5 lines down an offer price of $263,000. So make sure you guys are all looking at the right form, or you can all put them side by side. I'm going to walk you guys through the way the math works on this. All right. So one of the big values, first and foremost, is they're going to cash back the offer, right? So your buyer can put in a cash offer on the property for a guaranteed sale. So that's kind of point number 1 on why this program would be an advantage to that. The second is, through this program, we're going to guarantee certain appraised values, regardless of where the appraisal actually comes in, which is why you can waive the need for value to matter on an appraisal. I still have to do an appraisal, but I'll go through this scenario where it doesn't matter if the price is at 263, 250, or 230. The deal to the seller stays the same. They fully back every dollar that the appraisal is short up to certain numbers, and I'll walk you guys through what that looks like, okay? So the way that this program works is we pre-approve the buyer. So we're saying, yes, they're good for financing. We believe we can do a conventional loan, FHA loan, VA loan, whatever. Loan program doesn't matter. So then we send everything into Ribbon. Again, we've developed a relationship with them. They auto approve anybody we say is approved. It takes like 20 minutes. We put their pre-approval letter in, and they come back and say, great news. You said they were pre-approved at 400,000. They're pre-approved at 400,000 with us, right? So we get the buyer set up done, and we do that day 1, the very minute we issue a pre-approval. If we've talked to the borrower about this program, that's the next step, is to go ahead and get it put in. Okay. So the buyer piece is done day 1 when we issue the pre-approval. Phase 2 is now you've selected a property that buyer is interested in submitting an offer. Okay. So a big part of this is the appraisal guarantee, that they're going to guarantee a minimum appraised value and cover any difference below. Okay. So what happens is, you tell me that they want to put an offer in on 123 Main Street. This example that we're going through here was a real life example from Friday, right? List price is $250. We grab the property address. We go into Ribbon system and we put in the property address that they want to buy. they have an appraisal team internally that is looking at MLS data, they're looking at AVM data, they're looking at a bunch of different data sources, and they're coming in and saying, okay, what we feel the bare minimum this home is going to appraise for, we will absolutely put our name to it, guarantee anything short. In this case was $263,000 on a $250,000 listing, right? So they basically said, we'll go 13 over list price, and we'll 100% guarantee it, no extra skin in the game from the borrower, except for the 1% fee, which is what it costs to do this program for a buyer, okay? But no additional for the appraisal. So at 263, which is the very first one, we'll go down through. List price 250, we're talking the ribbon value. They give us two numbers, there's a ribbon and a max. The bare bones number on this one was 263. If the buyer agrees to put in an offer at 263, they don't pay anything additional for appraisal gap coverage. They just pay a 1% fee to ribbon boost, and down the bottom you'll see $2,630 is the fee that they pay to have their offer fully cash backed and guarantee every dollar of appraisal shortage under 263. So that is their max hurdle. If it appraises at 240, they are not covering the $23,000 difference. Ribbon is all they're going to pay is $2,630. Okay. Second phase is you say, okay, 263 is great. However, I think there's going to be other offers I need to go higher, right? So they give us a max ribbon value, which is step number 2. In this case, there was only a $5,000 spread between the two. We've seen others that are 20 grand, 30 grand, and one that was only 1,000. Right? So that's going to be a property by property specific. It is not going to be something that is, a percentage based or anything like that. They look at it, they kind of come up with a conservative number in their mind of 263 and an aggressive number at 268. In that case, if you want to put an offer in at 268, the buyer can buy appraisal insurance guarantee for 25% of the difference between those two numbers. So max ribbon value is 268, ribbon value is 263. There's a $5,000 difference between those two numbers. So the buyer can put an offer at 268. They buy insurance to cover that additional $5,000 in appraisal gap for $1,250. Exactly 25% of that spread. So now they can put an offer in at 268. Again, regardless of where the appraisal comes in, the buyer pays the 1% fee plus that $1,250 to buy insurance. They're going to pay ribbon $3,930 at closing. Okay, it is insurance. So if the house happens to appraise at 268 and there was no shortage, that money is still spent, right? It's just like buying car insurance or health insurance. Even if you don't wreck your car, you still pay for the insurance, right? So in that case, it's spent. Once you commit to it up front, which is why they only charge 25%. So if they're wrong, they're going to cover the full appraisal gap. They're hoping they're right enough that 25% insurance covers any losses that they would get over time. Okay, so they're literally looking at now offering 268 on 250. The buyer is committed to spending $3,930, but that's it. Regardless of what the appraisal comes in at, 268, 260, 250, 240, the buyer is still only in for $3,930. Ribbon covers every other dollar the appraisal comes in short. I was worried when it played out this way that they would be extra conservative, but again, what we have found is they are typically between 15 to 25K over list price right now in the Columbus market. That's what we're seeing on average that comes through. Now, if somebody goes out of control and the house is worth 300 and they list it at 400, right? There's a chance that those ribbon values could be less than the list price, right? If they went just completely, rogue. But again, these were not like specific deals or structured in a certain way. They were random properties the borrower was interested in, real listings out on the MLS. And they came in, basically 13 to 18,000 higher on what the buyer could agree. And again, they're covering 100% of the appraisal gap. So it's an infinite appraisal gap at that point in time, which is why you can remove the value piece of the appraisal. You still have to do it, but the value is irrelevant. It's basically for informational purposes only, right? So again, my numbers are going to be based on it, but they're covering the difference. So the financing goes through regardless of what the appraisal comes in at that point. And no extra skin in the game from the consumer, except for that $3,930 that they agreed to put in. Okay. Step 3, that's still not enough, right? 268 is not going to get it done. So you want to go above and beyond that. You can do that, but now the borrower is going to cover every dollar like a true appraisal gap. So above 268, so in this example, if they want to go to 281.4, right now we're 31,000 over list, the buyer is going to pay the 1% plus the 25% spread between 268 and 263, and then 100% of the difference between 281.4 and 268, which is an additional $13,400. So in that case, that works like a true appraisal gap, right? The 25% insurance, that 1,250 spent regardless. The additional money works like an appraisal gap. If now it appraises for 281.4, they get that 13,400 back. If it's not needed to be done, right? If it happens to appraise at that big number, then they get their 13,400 back. But if it appraises at 240, they're committed to putting in a total of 17,400 at that point in time to put an offer in fully backed up, 31,400 over list price. So you kind of have option 1, option 2, option 3, right? And the way that it goes through. I've got a max number on here. I just found out when I was teaching the last class because I had a ribbon exec with me. There technically is no max, but the buyer has to put all of this money up front as earnest money, right? So they can go 50 grand over the max ribbon number if they want to, but they have to literally put the money up front plus all 50 grand up front in earnest money deposit, right? So you're gonna have a $60,000, $70,000 earnest money deposit at that point in time if you choose to go that route. Earnest money is handled like you normally would, no change to your process. Broker holds it, title company holds it, however you guys do it now, same way it would happen then, right? The money doesn't come to us, it doesn't go to Ribbon, it is held just like your normal earnest money. Then that money is provided back to the buyer at closing as the normal earnest money credit, and then whatever fees at the bottom of this are paid out of that, and they get the rest towards the down payment, closing costs, and everything else, okay? So that's where like the math really comes into this, is each property is going to be unique in the values that they're going to guarantee, right? So we had one at 140 was the list price. They came in at 157 for the ribbon value, 160 for the max ribbon value, right? So they could go about 20 grand over. Buyer's agent called, they had offers at 200, right? So obviously that's not going to work. This buyer didn't have the other 40 grand to cover it. So they reverted back to the standard offer and they offered 200, only guaranteeing a $10,000 appraisal gap, and ribbon went away. No fees, no structure, they just went away, right? So this is going to be an option when you're structuring deals. If the ribbon scenario works, great. If it doesn't, do it the way you've always done, right? The fees are only committed. Yeah.
Do you add ribbon as a co-buyer?
No, they're not a co-buyer. There's an addendum that will generate. So once we've approved it, you guys go in, you actually have to do the last piece of putting in the true offer price. It's going to generate an 8-page addendum that walks through that they're not a co-buyer, they're there as a backup. So if the offer A falls through, they'll buy it in cash. And then they send proof of funds of $250 million along with it. So make sure that they know that it is really backed by cash.
Goldman Sachs.
Is it real?
Yeah, I don't know who backs them, but.
I think it's Goldman Sachs.
So, I mean, that's the biggest piece of it. I'll pause a little bit and let you guys ask some questions on it, right? That's the money piece of it is what the buyer has to agree to, right? The values have to be there and they have to be willing to pay the fees.
All right. Make sure we're talking the same language.
Yep.
When we write an offer, do we write it as a cash offer or contingent on financing offer?
Cash offer.
All right, how do we explain that to a seller and a seller's agent? Instead of, here's the 8-page addendum that explains it.
Right. So we are recording about a 4-minute video. My branch down in North Carolina has it. I'm basically mimicking what they've done. What they found, right? So when they first rolled this out in North Carolina, they just sent the offers, right? They just made the mistake of thinking it would be self-explanatory, right? Looking at the program, I have no idea why you would think a listing agent would figure it out if they haven't been to one of these classes, right? So what ended up happening is you got cash offers and conventional, then FHA, VA down here somewhere. And then these just got put on this other stack, right? It was too complicated. So they didn't even want to figure it out. So they just were like, eh. And so it went from being what we were hoping makes the offer stand out to getting put basically in the trash can. So this 4-minute video that they did that I'm going to be mimicking off of that works. We will also call the listing agent and we'll walk them through it. Ribbon will also get on the phone with the listing agent and walk them through it. So you don't necessarily have to be the one to fully explain it. You hand it to us, hand it to Ribbon, forward the video, and it's going to walk them through the basic parameters on what the, how the deal works, what the value is, right? And then obviously we're just available to answer any questions and make them up.
So when we make the offer, will we know ahead of time that it's going to be a ribbon offer?
Mhm.
Or, because you were kind of going through a scenario where, well, we'll revert back to a financing offer if the gap coverage is too much or something like that.
So, but when you're going to put in an offer, right, you're going to tell me you're going to put an offer on a 123 Main Street. I'm going to get this into Ribbon system, right? So far we've seen 1 hour be the fastest, 6 hours be the slowest, but they basically say we can call it and harass them to get them faster. So they're going to do their valuation on it, right? So the one that we took 6 hours, wasn't in a rush, so I just let it play out. But the other ones, we've been averaging closer to about an hour and a half. So you're going to get all of these numbers up front. So you're gonna know exactly what your ribbon is, your max ribbon, all of these types of things. We'll be in communication. And so, okay, where do you think the offer wants to go in at? And then we'll do this spreadsheet and send it to you, so you know exactly what those numbers look like, right?
Saturday and Sunday.
Yeah, absolutely.
24/7?
So on Saturday and Sunday, they say they're only open from 9 until 5. I was getting answers back until 8 o'clock last night, so they don't promise it. But so far, I have not reached out to them and not had somebody available, but their posted time is 9 to 5
The rep said
on
9.
Saturday and Sunday.
The reps, our rep said 9 to 8 on Saturday and Sunday. Monday to Friday, I think it's still just.
Hey, that's
9 to
coming,
8.
that's coming soon. Let's do the homework, go.
Remind me, when you were talking about earnest money, having that stack of cash there and putting it in earnest money, so you don't need any proof of funds for that, but I guess I'm getting confused, why would you need that as proof of funds? Or are you saying if we go above the appraisal gap or the max ribbon amount, you want to see that as an earnest money deposit?
So,
that way you know.
Yeah, so basically what happens is, right, so when the financing closes on time as it should, the ribbon fee is 1%. In the scenario where ribbon has to step in and buy the property because something went really wrong, their fee goes up to 2.75. So that's why they have the buyer put that up in earnest money first. Because if the deal goes south, ribbon has to step in and buy it and rent it back to the buyer. That full 275 is charged. They want to make sure that somebody's holding that money versus them needing to come back and try to collect it from the buyer. So that's why it's in there as earnest money, is in case ribbon does buy the property, they've now earned that full 275. The earnest money gets paid to them. They buy the home and then rent it back to your buyer. So that's where that earnest money comes in. It's just guaranteeing that the money's there to pay whatever the fees are with ribbon.
When you're qualifying a buyer, you say before we get into this ribbon product, let's say you qualify them on FHA.
Mhm.
And then they have to go 20, 30,000 more, but you qualified them on that first number. Can they go over and above what you qualified them for?
It doesn't fix financing, right? So the max of any of this is gonna be what they qualify for. It's not gonna take a borrower with a 540 and help them buy a house, right? It's the financing is normal, whatever they qualified before, they still qualify now. It's just making their offer now a cash backed offer instead of being an FHA contingent offer.
So when they buy the house though, let's just say they have to rent it for 3 months and they buy it back, then going back to the FHA loan, whatever they originally were qualified at, 3.5% down, whatever down.
Correct. The only nuance being unfortunately FHA has a weird quirk. Once you move into a property, you have to be there 6 months before you can close. So in that case, they would be renting the full 6 months before they buy. On a conventional, it could be 1 week later or 3 months later, but then the financing looks normal. Again, it fell apart because we needed to fix an issue. Whenever we fix it, the financing goes through just like a normal deal.
But when it does, they have to, again, it's under, the owner is now Blue Ribbon or whoever it is, if they have to step in and buy it.
Correct. Yeah, Ribbon would become the owner and the landlord at that point in time. If the financing fell through, they buy it, they're now the buyer, and then they would rent it back to your buyer, and then yes, they would be the seller when that next transaction comes through. Key to that is they sell it back for the same price they bought it for, guaranteed. So if they buy it for $210, they sell it back for
So
$210.
is there a payment a month, the same
The-
as a rent?
The rent is predetermined, so when we get our numbers for the ribbon and the max ribbon, the rent actually is posted on there. So before they ever even offer on the property, they know what the rent would be in case of that catastrophic scenario.
So I hear 2 transactions, I think of 2 sets of closing fees for a seller, right? Title insurance, which your lender is gonna require, as well as transfer fees and other closing costs. Who bears those costs?
Ribbon pays it up front when they buy it, the buyer pays a normal customary cost when they buy it back. So the buyer only pays 1 cent.
Well, the buyer doesn't usually pay a transfer fee or for title
Again,
insurance.
customary fees to the market, so they won't in this case either.
Wow.
Yeah, customary fees to the market,
So
because
Ribbon-
when
Ribbon's
Ribbon
paying-
buys it, right, they're getting those credits from the seller, so they reissue those same credits to the buyer when they buy.
Okay.
Do you have any stats yet, or how many ribbons had to buy?
So they basically, their stat line, they said 82% go Ribbon Boost, which is the 1% fee that they don't. So they didn't specifically say it, but I would extrapolate that out to 18% of the time they've had to step in and actually buy the
18%
property.
of the time they've had to take over
Yeah.
the property.
In our experience, they've done it once on 150 transactions. But again, they don't they have a little bit too much trust in some lenders, in my opinion, right? I like the trust they put in me, right? But again, a lot of times people are kind of willy-nilly with their pre-approvals, get people in contract that can't close, because I know I save like 10 deals a month. So those stats are skewed, but yeah, we've literally had 1 out of 150 that we couldn't close, they had to buy. So yeah, it is not our intent, we will be as devastated in that scenario as anything else, right? But again, it protects against job loss, something else just, crazy happening in the marketplace. But yeah, this is done with the intent for them to pay the 1% to be a cash offer, but it's still close with financing.
When's the 1% due?
Or it's put in as earnest money. So right up front, when the offer gets accepted, they owe 2.75% of the purchase price at minimum in earnest money. Again, held, whatever, the 1% is then paid at closing. So they get credited back to 275 and then they pay the 1% Ribbon fee at close. Ribbon doesn't fully receive any money, right? So if, say, the one contingency that has to remain, right, which creates a lot of heartburn, at least from the last class, is you can't waive the home inspection, right? Because Ribbon, if they're gonna end up being the landlord on the property, they want to know that it's safe to live in and they're not gonna get sued for renting properties, blah, blah, blah. They're checking for major health and safety issues and major mechanicals, right? It's not nitpicky, it's not every little thing. They just want to make sure the property's safe for somebody to move into. So you cannot waive the home inspection. You have to get it done with a minimum inspection period of the contract of 7 days. And then they're going to come back and say, okay, for us to be the end buyer, we need you to fix these 3 things, right?
You have to have a remedy. So you have to have remedy relief.
So with one little caveat, right, depending, if the buyer is comfortable, right, being forced to pick up that cost, you don't have to have the seller required to do it, right? So what they kind of talk through, right, and it gets a little bit weird is, say they come back and they want 2 things fixed, but it's not on my appraiser. My appraiser didn't care. My appraiser loved the property, didn't mention any condition issues. We can close without fixing the repairs. Nobody has to do anything, right? But again, when the financing, if it fell through for some reason, got lost its job, we can't close, Ribbon's not going to buy the property in cash until those repairs are done. So the backup kind of goes away a little bit at that point in time, but I can still close as long as it's not on my appraisal. I don't care what their request was, and they don't care, right? It's only if they have to become the buyer that they're going to require those repairs to be done. So again,
That could be at the close.
so they won't buy it until those things are done. So we can, if it's in our appraisal, we can work escrow repair, lots of things like that, right? If it's not on my appraisal, we just close them normally. So again, it's really going to come up and be a sticking point. If the deal falls through, they have to buy the home. That's when they're going to require. From dealing with it in North Carolina, it has not been a big issue as far as the things that they require to be repaired are not significant. They're not nitpicking the property. They're literally just doing CYA. They don't want to be a landlord of a house that somebody could potentially get injured in and open up lawsuits. They're looking for the major health and safety issues. Smoke detectors, GFCI outlets, right? Unless the property's, falling down and there's a major structural issue and a lot of things you probably doesn't want to buy the house anyways. The big key is too, if you do the home inspection, required repairs, it freaks the buyer out. They don't want to be in. If the buyer gets out of the contract at that point in time, they owe Ribbon nothing. Right? So if there's a legal recourse to get out of the contract and the sale does not occur, Ribbon does not have to step in and buy it, and the buyer doesn't buy it, no money is owed. Everything gets refunded back to the buyer. So the fees are only earned if the buyer closes, it's gonna be the 1%. If Ribbon has to buy it, it's 275. If nobody buys it, it goes back to 0.
So the buyer can pay for that repairs if they choose to, right?
Correct.
So that's what I was gonna get at. So it's all about presentation to the seller.
Yes.
If there's 10 offers, if we put the fee or levy on there with the idea that we know that we will fix things if they're not major, but if they are major, we can still walk away and nothing will be done.
Correct.
So we can still wait with no reference.
Correct.
Yeah.
Yeah. But if you clear that stage, right, and the buyer wants to still move forward.
Because now all of a sudden that cash is no good if you don't make those repairs.
Right. So I mean, again, it's gonna be up to the seller, right? So again, that's gonna be how you structure it, how you phrase it, how much you enter into the weeds on that stuff. But again, if the buyer was able to walk because of the home inspection.
Choose to do it.
Then they would just be forced to walk away.
Right.
So it's either or.
Like if anything came up, you just lost
Nothing.
your cash offer. If things came up,
Well, if you lost your cash offer.
right,
On the seller side.
Yeah, the buyer would basically be agreeing to cover those costs at that point in time. If you waive
Just tell
the right to
buyer,
request remedy,
cash offer.
and there's GFCI outlets and smoke detectors, the buyers basically agree that if it comes down to it, they're gonna put up the money to hire the contractor to get the work done.
gotta do it before closing, well, you don't have to do it before closing,
You gotta do that
unless they show up on the appraisal.
Yeah.
It says close in 14 business days.
So 14 business days, which we actually say 21 days is our standard close time. So it fits, line in line. And again, there's different things like, so with the conversation we had, right? They said basically, okay, everything is jamming, right? We get past inspection, financing goods, or in final underwrite, like heck, the guy got laid off, we were clear to close, right? But we have to do a verification of employment 48 hours before close. In that case, Ribbon would want a little bit more time in order to get their ducks in a row, like an extra week, right? So at that point in time, we're still within a 30-day contract. But if we find out early enough, then Ribbon would still be able to close on the 21st day, right? So the little bit of that could add a little bit at the tail end if we get a super late game surprise on why the borrower's financing fell through.
So
But we're still gonna provide financing in 21 days.
So you basically say altogether it should be between 21 to 30 days closing.
30 days, worst case scenario, and that's if they find out late and they need to buy. As far as financing goes, that'll still happen in our standard 21-day process.
Okay, so it's not real true cash offer though. If we have somebody that come in with cash and close in 7 days, that offer can win any.
Sure, yeah, and again, it's not gonna be the pure cash, 7 days, as is, where is, no contingencies, right? It's not gonna be that, right?
Okay.
It's just not gonna stand out there. The idea is it can be in line with other types of cash deals and ahead of financing contingency deals, right? So yeah, it's not, again, it's not a magic fix. It's not gonna fix every single scenario. If somebody gets an offer 40K over full cash, no appraisal, no inspection, obviously that's still gonna be a jump out of the ground.
Who's been the most likely buyer or buyer scenario that's been using this?
So it's been a mixed bag. I mean, a lot of it is been conventional, but that's what my North Carolina branch does more than anything else. That's the type of referrals that they get. I actually see the most value for an FHA VA buyer because their odds of getting an offer accepted right now are terrible. You know, so what we're hoping is they at least jump over all the conventional contingent offers. Now they can be a full cash back. So I think it adds more value to that FHA, that VA buyer to hopefully overcome some of the stigmas associated with that.
I think it's for people that don't have a lot of appraisal money, because you can pay a small portion for that appraisal. It's an insurance, but then you can get more money to pay the seller. That's
Yeah, and that's, at least we'll know ahead of time because we'll know what their value is
Mhm.
by, yep.
Yeah, so this exact scenario that we were going through, this borrower only had $5,000 in appraisal gap money available, right? So their choices were to offer 268, but only guarantee 5, right? So then if it appraises at 250, seller's really not protected to the full 268. So in this case, it actually gave them the ability to cover basically an 18,000 over list price guarantee. And obviously if it came in under list, then it would also guarantee that. So we hit their $5,000 leverage. They only spent 1,250 and all of a sudden they gained 20, 30K in appraisal gap coverage. So definitely, you know, when that comes into that stuff, it's gonna help, right? If your buyer's putting down 20% anyways, has an extra 50 grand, whatever, you're probably better off just putting a standard offer in versus bringing in this complication. But somebody that's only got 5 or 10 grand in appraisal gap money, absolutely this comes into play. FHA, VA buyers, definitely this comes into play, right? And it's gonna be listing agent by listing agent. And again, we're gonna do the video and we're gonna call and do our best to make sure that this offer stands out, right? But it's gonna take a good agent on the other side that can understand the numbers and the benefits and those types of things. If they just got into business yesterday and they don't have a good support, it's probably gonna be too much for them to handle and their brain might just explode trying to process it, right? So again, we're gonna kind of go, it's case by case. And some buyers will use this on this house, but if for whatever reason it didn't work out, when they go to this house, the numbers may play out differently and it doesn't make as much sense. So we know as we're getting into this, it's gonna be, you know, buyer specific and property to property specific, whether this is the best strategic angle to put the offer or do your standard normal offer like you would anyways.
So how you seen their underwriting, appraisal, internal, whatever system they do, are they more on a conservative side or they actually more?
I mean, again, like, so list price was 140, they came in at 156. This one was 250, they came in at 263 or 268.
Okay.
So they're not going 40 grand over list, but they're not at list, right? They've been 10, 15, 20K over typically so far. I've been pleasantly surprised. I was worried they were gonna be super conservative because this appraisal guarantee piece is new. They've only been doing that for the last 45 days. They didn't do that in the North Carolina market until a month and a half ago, but they seem to be pretty aggressive. They're really trying to help these offers get accepted. Thankfully, in North Carolina, since it rolled out 45 days ago, their people are pretty good. We've actually only had one appraisal come in short, but they covered it without a second fight. I mean, they literally just said, how much was it short? 15K, they just wired it straight to time. They didn't make us fight and submit forms and jump through hoops and yell at people. It was just, hey, came in short, here's the appraisal, 15K wired the title within 24 hours.
Condos? No.
They will do condos. So yeah, let's talk a little bit about that. Properties they don't do. They don't do manufactured homes. They don't do properties over $1 million. They don't do multi-unit with one small caveat for a 2-unit where they're gonna live in one, potentially rent the other, with the weird caveat being it can't be rented at the time they close. Both sides have to be vacant for this to work on a 2-unit. So again, it's a little bit nuanced there.
So
Um,
4 unit is a go, is a no.
What's that?
4 unit is a
Yeah,
no.
3 and 4 units now. It's gotta be single family or a completely vacant 2.
What if 4 unit vacant and the
No,
buyer?
two-
live in
two
1
max.
unit?
2 max.
Now, if I take this right, that's right close to, cost of the buyer, there's 2 earnest monies involved, one on the contract, right, and then one to you.
No, it's one and the same.
No.
Just the minimum required earnest money in the contract is the 275 plus any appraisal guarantee fees. We don't collect it. It's nothing to us, just 2.75 and it's held by the broker, or however you guys normally do it.
Okay, so they have to have cash, I mean, they have to have this money.
Correct.
A lot of
And again, I
people
mean,
require that
it's gonna be credited back towards their down payment, closing costs, all those things anyways.
Yeah.
So they still don't back a home over $1 million, even though the buyer to avoid PMI can put
Yeah,
20% or more.
because again, they have to come in and buy the house in cash, so the down payment and what the loan amount is isn't their concern. They just have the $1 million cap.
$1 million
Yep.
top.
So yeah, gotta be under $1 million. House has to be built after 1960 or rehab. And their version of rehab is major mechanicals replaced after 1960. So they don't care if it's got nice granite countertops and stuff like that. They want the furnace, the air conditioner, major mechanicals to have been updated after 1960, right? So theoretically, you can close with a 62-year-old furnace, but no older than that. They won't do properties with more than 4 acres. So it's not for multi-acreage property. It's limited to 4 acres. Sorry, it said no double wides on manufactured homes. One concern is especially on condos, but it could be any HOA. A lot of HOAs have come in and started saying they're trying to fight against the iBuyers. It's more prevalent in other markets than here, but there's chatter, right? So if there is a lease back, that they won't allow rentals, we'll have to get a carve out for this, because if Ribbon does need to step in and buy it, they are gonna rent it back, right? So their goal is not the whole property. They want the deal to close. If it doesn't, they want to get it off their books in 6 months. So they're not doing the iBuyer model, but we would need a carve out from the HOA if they're buying in an area that has a specific no rental policy trying to fight against those hedge funds and iBuyers and those types of things. Trying to think what else there was as far as disqualifying properties. Yeah, 1960, 4 acres, $1 million, no manufactured. That's pretty much it. Works for everything else. It is primary residence only. So this is not investor, second home stuff. It doesn't work. They got to be moving into the property as a primary residence. No score limitations, no debt ratio limitations. If I can pre-approve them, they're qualified. So ignore it when you see that on the flyer. If somebody's a 580 FHA borrower, we'll still close it as long as I can approve it.
So basically, they have to pass your pre-approval first before we even talk about it.
Correct. Yeah, so this won't save a buyer that can't qualify, right? If they don't qualify, they don't qualify. This does nothing for them. It is literally trying to help them with appraisal, gap coverage, and making their offer stand out in the crowd.
So basically, you don't have, this is the cash Ribbon offer. It's just a cash offer. right?
Yeah, when you submit the contract, it's listed as cash, right? They have an 8-page addendum again that goes with it, explains the appraisal will be done for informational purposes only. You can't waive the home inspection is the only thing you can't waive as far as that continues.
Do we disclose it as a cash back offer or just straight up?
For the Columbus contract, that again, Mark, correct me if I'm, speak out of turn here, right? To the broker, they're saying market is cash. Just literally, it's a cash deal because it is fully backed. So if for whatever reason the buyer's financing falls through, property's still going to sell. So in their
So
opinion,
when they're,
that's a cash offer.
when they're asking for proof of funds, that's when they get the 8-page addendum and.
That all comes with the initial contract. Literally, you'll put the property in, we get the values. You say I'm offering 270, addendum prints out, proof of funds goes right along with it.
What's the seller expense if it's a VA loan?
So the weird part with the ribbon fee, we're not sure if it falls into that VA unallowable piece of it. So what we talked to them about that. So what they do in that case is they don't put it on the CD. The buyer then just pays the fee directly to ribbon. So they basically get an invoice for the 1%. They pay the check directly to them.
So
and they're full
I'm thinking if,
275.
my question is about, let's say Ribbon doesn't need to buy it in cash. Does the seller now incur, what does that cost on VA? It's been ages since I've done one.
So, I mean, right now, typically, the only unallowable fees are basically the termite inspection, right? Everything else, there's no difference to that as far as the seller is concerned. And there's even a lot of misnomers on that. That only comes on small VA deals, right? as long as our processing and underwriting fee are less than 1%, we can squeeze in the termite fee and the buyer can pay. Right? So that went out the window, but there's an old stigma around that. If it's a $90,000 VA deal, then yeah, that really limits what the seller can pay. But on a traditional $250,000 VA deal, you know, buyer or seller can pay for the termite inspection fee.
The buyer agent can pay for that too.
Yeah, nowadays, basically, as long as it's less than 1% on the unallowables, anybody can pay, which typically with the prices the way they are now is fine.
Right.
So the seller shouldn't incur any additional costs as
That's
far as.
the
the
key to
business.
my question.
Yeah.
Apparently you did good at the board. Nobody asked more questions here.
I hit a lot of the questions. I'm usually a fast learner. Like I heard all these questions. But I hit it now.
So Charlotte, what's your feedback down there? Is it? We were talking before we started, you know, most cases in my experience as a listing agent, if it's a finance deal with a strong pre-approval and it's 15 grand higher than this cash offer, my sellers are taking the higher price.
Sure.
I mean, are they seeing that as a huge benefit?
It's a mixed bag, right? And again, stats you can convert any way you want to.
Right.
Their stats are these offers are 3 times more likely than a financing contingent offer to be accepted. Where they got that data and how they based it, I haven't. Right.
You mentioned 25%. Actually went to closing with the ribbon.
18%.
18%. That's.
But again, that's on the lenders that were participating's fault. Again, mine is 0.7%, right? Not 18%. But again, it's because if somebody just, you know, if better.com, you know, say throw them under the bus here, right? If they're the ones doing it, right, their close percentage is like 50-50, right? So they're gonna have a lot more that are gonna fall into that bucket of revenue to step in and pick up the property. The other thing to keep in mind too is that also that 18% includes the home sale contingency removal, where they're buying the house only because the home hasn't sold yet, not necessarily because the financing fell through. But it removes the need to have a home sale contingency in the contract. So a lot of the 50% is gonna fall into that, you know, 7-8% is probably the lenders messing up and not because it was.
Still trying to work on having.
So to throw.
Well, the nice part about it is
You're
with that
riveting.
addendum, I mean.
And they have the
it's-
computer system.
Well, with the addendum, it's very transparent. I mean, the
Right.
seller's gonna know what they're getting into, what's
Right.
going on.
Yeah,
You better do a really good 4-minute video.
yeah, I will.
Yeah,
We're
it has to be a
gonna.
And also
Yeah,
you
guaranteed.
have that computed version of whatever you bring in here, so we don't have to do that map. They have everything
Correct.
printed already.
Yeah, this, I spent time and I sent it, and this is actually one of the things I fixed Ribbon on, their website was wrong. My calculator was better than Ribbon, so they actually updated the website for my calculator, so I'm pretty happy about that.
So as soon as you find a property that you want. you're
Yeah, you
fine.
basically call us and say, hey, we want to do this, just like right now, we do a property specific pre-approval every time you put an offer in. Immediately, if it's a Ribbon eligible, we're gonna submit that property address in, they're gonna work on the evaluation, right? So we're telling agents like, look, if you're only showing them one house tonight and you think in your gut it fits them, give it to me now, before you even
Right,
go, let's just get the value working on, right? If you're showing them 5, you don't know which one it is, let's wait until they pick one. But again, you guys know, if you're taking somebody out, it checks their boxes, like it's pretty likely they're at least gonna make a run at it. Give it to me that morning before you even show it, we'll get the value, so that if they are ready, I'm hours ahead of the game, hopefully you can already have the values,
So
right?
if there's a deadline at 9 o'clock at night and it's 4 o'clock in the afternoon, and you're pretty sure they want to make an offer, just go ahead and.
Yeah, get it over to us, right? So we had one yesterday, again, it was like noon, we put it in, offers due by 6 o'clock. They were running up against the deadline, it came through right beforehand, but I was just about to pick up the phone call, like, I need this in 30 minutes, right? Which they
Yeah.
say they'll jump on, and from our experience in North Carolina, they do. If we need it, we can always get it back within about a 2-hour time frame. It's never gonna run past that if we're calling and saying, hey, we need this right now.
Call me, you'll leave that ticket.
Yeah, but yeah, the minute you know that it's a likelihood you're gonna offer on the property, get it to me and we'll put it in the system. It takes us 5 minutes of time. I'd rather do that if you had to get, instead of we're not, you know, waiting on them to put the offer in. I mean, nothing's charity, right? They've run the numbers. They know they're gonna make money. They're counting on 1% plus that 25% appraisal gap to cover the deals that they have to step in and buy, right? Even the 18% that they step in and buy, I don't know what the number is. Their full intent is to still sell it, right? So they're not intending to lose money on the deal.
Right.
And honestly, right now, the way the market's been, if they get stuck with a house, it's the worst case, they sell it for more, right? So their only risk is that the house is gonna go down in value, right? If houses go down in value, this whole program probably blows up, right? But other than that, they're gonna make a boatload of money. If I had an extra $1 billion laying around, it's doing something.
So do they insure the properties when they own them?
For homeowners insurance, yeah. Yeah, they are the true owner, landlord, they cover all the insurance.
So it's not required if they have to pay cash, right? I mean, that's just.
Right, but they do, yeah,
But
they do, yeah.
Or what the, in worst case, they end up buying, what's the rental amount look like? It's a violation of the cost of the loan or is it?
No, it's based on market rent, so at the same time they're analyzing the property values, they give us that rental, so on the $140,000 listing, they valued it 156 or whatever. The rent on that one, I think, was $1,300 a month, so if they end up having to buy it, the buyer was gonna pay $1,300 a month in rent. So that's kind of, just.
How
it's
similar
properties-
is it to a regular house payment? If they would have bought it, it would be
It's more, but rent's typically more, so I think on the financing on that same house, I was
Oh,
supposed
yeah,
to like
rent.
$1,000.
Mhm.
Rent was 1,300, but I think that's typical to market. I don't
The rent
think
is
that's
typical.
typical.
That's some money.
Yeah.
Yes.
What happens if Ripon buys the house? Okay, now we go 6 months down the road, Ripon's obligated to sell the house to the original buyer at the original price. The buyer comes in, we do an appraisal, it does not appraise to that price.
Same appraisal guarantees, just like up front. So if you put it in at 268, you bought the appraisal insurance, all that stuff up front, that still carries through all the way to the tail end. So it now appraises at 240, they're covering the $28,000 difference.
So we only get paid that final closing, right?
You get paid when Ribbon buys the property, if Ribbon has to buy the property. Yeah, you guys get paid, I don't. I have to follow through, get the financing done. For me to get paid, you guys get paid the same way it normally would. If Ribbon buys the house, all agent commissions are paid. So.
When does the earnest money get released when Ribbon buys the house?
Correct. Yeah, or at closing or when Ribbon buys the property. If basically that 275 is converted over to basically like a rental fee that goes to them if they have to buy the property. So if financing happens, the 275 gets credited back at closing, the 1% Ribbon fee gets charged. If it doesn't, the full 275 goes through.
That addendum covers that in the
Yep.
contract.
Yep, it's all in there. And I can obviously get a copy to Mark and make sure that he doesn't, I want to get the property with me, so I'll make sure he checks it out.
Quiz him in about a week.
He's like,
And again, we do everything for you except for generate the addendum because we are not licensed realtors, so we can't write contracts, right? So we will get the buyer in the system and approve, we'll put the property in and get all the numbers. If everything checks out, you guys will need to do the final step in Ribbon's system to generate that addendum. I will warn you, Ribbon is crazy aggressive. I love it. Like their salesmanship is fantastic. The minute that I put your name and phone number on a contract, you're gonna get a call 5 minutes later. Like they are on it. I don't care if it's Saturday afternoon at 4 o'clock, they are on it. Like I didn't know that, so I put one offer in and I didn't tell the agent I was doing it. I was just curious to see what the value was. And I got a call like, who's Ribbon? What the hell's going on? Like, what happened to the finance? All right, so now I'm prepping everybody. If you put your name and number on, like, just so you know, you're gonna get a call from Ribbon in about 5 seconds. So just be ready for it. There is a flyer in here that says like for agent, it's got a little QR code. So if you do that, you can get your Ribbon account set up now. And then you actually have an assigned Ribbon rep to ask any technical questions of what does the contract need to say and how to write an addendum, how to do all of those things. If you scan it, you put it in. They're not stalkers ongoing. You will get the first phone call very quickly, but once you have the account set up, then they're set out. They're not calling you every week to say, where's our deals or anything like that. So they're pretty passive after the first one, but they're crazy aggressive on the first one. So if you scan it, you will get a call to say that.
which one you want us to attach to our offer to the listing agent? What's the 1 page summary of what is Ribbon?
I'll give you the video. The video will be better. I don't know if I could write it on 1 page where it would be coherent and not lose them. So the video is a lot easier to kind of explain that through there. So I'll get, for now, like if you submit one tomorrow, we can use my one in North Carolina. It's just branded as True Loan down there. So it's a division of Rapid Mortgage. But I will get my own Rapid Mortgage, video here within the next week.
I'll have your video by Friday.
Damn, okay. You're really random.
But if I don't show up.
I will find you.
In 5 seconds.
I just committed, so I will find you.
Right, you gotta do it Wednesday.
Daily, you got a question?
In addition to Ribbon, which this is great, I had asked you if you would share rates and how many like mortgage applications you're seeing. We're feeling a little shifting going on.
Mhm.
And you guys get it on the front end ahead of us.
Right.
By 30, 40, 60 days. So if you would, I just wanted to remind you, that's all.
Rates are going up. So, I mean, honestly, rates are in the 5s solidly, right? 4s are a thing of the past, right? And we are, depending on credit score, right now, even needing to quote 6. If they're like a 620 borrower trying to go conventional, They can see 6.25 right now. The big kind of elephant in the room with rates is rates can't stay below the rate of inflation. So mortgage rates, in order for people to buy mortgage-backed securities, they are banking on that to outpace inflation. If it's not, they're locking in a guaranteed 2% loss, even at 6% rate, if inflation stays at 8. So what we are hoping is inflation can get under control. If it comes down to 6.5 or below, we think rates will kind of settle in the high 5s, maybe tap 6, and it stops there. If inflation runs wild and goes to 11 or 12%, we could go back to what I saw in 1995 at 8 and 9% rates. But we think the 6% is more likely. If I had to peg it, I think it will get into the 6s and it will stay in the 6s. There's political motivations to do certain things, right? A lot of people need to get reelected in November. Nobody wants to be the one that caused rates to go to 9%. So there's going to be some political maneuvering to try to keep that down, right? So, but again, for buyers right now, I mean, obviously the shock value from 3% in December to 6% today was gigantic. I mean, rates in essence doubled in the last 4 months. We went through this once before in 2013. For those of you that have been doing the game a while, you know, we actually had like a 45-day run where rates jumped 2%. You know, so it's not unheard of, but it hasn't happened a lot. And a lot of people just, you know, they weren't home buyers at that point in time and didn't really even realize it. So they're feeling the impact. But we think maybe 6s somewhere in there, it'll settle in. Buyer demand, again, it's a little bit hard for us to kind of handicap, right? Because I don't know what other lenders are doing in certain things. We are getting just about as many new buyer referrals a month right now as we ever have. So I have not seen a dip in the number of new buyer approvals, pre-approvals issued, any of those types of things. I mean, we are still seeing, like just on my team, we pre-approve probably about 30 to 35 buyers a month, and I'm getting 20 contracts a month. So every month I'm going 15 in excess of buyers that are now pre-approved and not in contract yet. So again, it could slow down at some point in time. We've seen it a little bit in smaller markets. So my Youngstown office, already feeling it. All of a sudden, sellers are willing to pay closing costs. Like I saw the contract that was closing costs. What the hell is that? Right? So the smaller markets, your Dayton, your Youngstown, Canton, Akron, they're seeing it more. But Cleveland, Columbus, Cincinnati, Charlotte, none of us in the big cities are seeing that shift yet. Right? It's inevitable. It's going to happen at some point in time. Buyers right now seem more afraid to wait longer because if they wait, they might even have the 8 instead of 5. Right? So it hasn't really seemed to scare anybody off. It's actually created some more anxiousness about getting into contract right now because they're afraid of rates going up.
Are you encouraging agents that got pre-approved a little while ago to come back and re-pre-approve?
100%.
Differential?
Yes.
I assume.
Yeah, so we're doing it at property specific pre-approval no matter what, but we've sent out videos and emails to clients just saying, hey, if it's been a while, check in with us. Let's update your approval. 1, to make sure you're still qualified with the same number. 2, make sure you understand the payment differential, right? And again, for most people, I'd say maybe 5 to 10% of our buyers are at max approval, right? That they want to buy at 200 and that's all I could ever give them was 200. Yeah, they're taking a big hit because they could go to 200, now it's 170. Most of the buyers could get approved at 400, but they wanted to be at 280 or 300. They're still fine. Their payment's $100 more a month, and it's not a major shift, right? So it's just your really tight buyers. You know, if you were basically told, hey, this is the most this person can absolutely go to, and you're bumping up against it, get that double check, right? Before you waste your time showing houses, doing all of those things, because very likely that buying power's dropped 20, 30, maybe 40,000, depending on the scenario. So it's definitely worth getting that refresh if you haven't had it done recently. But again, if they told you they're good to 400 and they're only trying to buy at 300, still good, right? It didn't switch that much, but if they were real tight, you want to get double check on it. And then obviously, yeah, we'll keep an eye on rates, kind of see where those things go. But right now, it kind of feels like the last 3 days of last week, rates got a little bit better. Today, they got a little bit worse. But right now, we seem to be kind of just entering a little bit of mini waves, not a big run. But again, what the president says, what the Fed says, what the markets do, it doesn't take much to spook everybody and have it start running again, right? So we just have to kind of, basically, I don't want the Fed to say anything for the rest of the year. Seems if you say something I think is good or bad, rates get worse. If they open their mouth, if you hear the Fed's making a statement, rates are gonna be worse the next day. Even the last one was weird. On the day they announced, rates got dramatically better all through the afternoon. And then everybody woke up in the morning and was like, yeah, never mind. And they just all ran back off plus another 30 basis points. So it just can't. Good news doesn't hold. Bad news seems to have much, longer run. So if you hear the Fed's going to make an announcement, make sure your buyers are locked in if they're floating their rates and then contracts. But yeah, other than that, the shift we don't see, right? Again, the demand for this class, right? shows, I mean, I had 60 agents at the last thing that came to try to figure out how to help their buyers compete, right? So we're still feeling that definite seller's market in Columbus with Intel and Facebook and Google and whatever, right? I don't even know where we're gonna fit all these people. It doesn't look like that buyer demand is gonna be down anytime soon in our market specifically.
Thank you, Mark.
Any other questions?
Thank you very much.
Yeah, it's much faster. I could go for about an hour, 45 minutes. We're sitting there like 50 minutes. Smarter group in here. The numbers just click. So.
Yeah, group.
Mark, thank you so much.
Yeah. Which means I got like an hour left for beer. If anybody wants to go like weekdays or something for beer.
I think it was July 6th of 2013, they went full point.
Yep.
Went from 3.5 to 4.5. It just shut the market down.
Back then, I was a refinance base. We're all like suicide plots.
Yeah.
Because it really been our world like 3.5 to 5. We're really toward like within a 45 to 60.
I worked straight. And I'm talking 10, 12 hour days. Easter Sunday last year. July 4th, without a break, couldn't slow down to hire somebody to help.
I don't know about.
Ended up on blood pressure. I mean, I made a fortune. It almost killed me. Yeah.
Hey guys. How are my boys? Oh, they're great.
Yep.
I want your opinion on this, because I know like your opinion.
So it's justice.
Once in a while, it's different, but not very often. So Raymond has. Counter, right? And they changed that for Al, but they didn't say all of the terms and conditions remain the same. So worry about signing or make them change.
Who's got the buy?
Maybe. But she didn't write it off the counter, they did. She asked my buyer to sign it.
Okay. And you don't have to pay.
I
Well, you have to look at the contract.
I
see
would-
what language the
I went
officer-
back and looked at the counter.
Yeah.
And the counter doesn't, it says the offer's been changed to this. But it doesn't say. all of the conditions remain the same.
Should.
I think it should. I think she should force the issue, but I don't want to be. That was your opinion.
And then the second hand of that is if you didn't make changes, everything you did change. You assume that the inspection timeline would change and everything else would change. And then we don't have to abide by other conditions. of the
She had to say what changes. The only stated change, we got that, all those things remain the same. Did anything change besides price? I'm an eye daughter and a tea crosser, and my thoughts would be to say, because the other agencies, you're being over the top, you're being silly.
contract. State purchase contract.
No, exactly. Because I would do the same thing. Yeah. I personally think that they should change it, and I just asked Mark his opinion, and he tends to agree.
And then the rebuttal is, you know, who's your responsibility to protect your seller.
That's right.
Why don't you protect yourself?